The Nasdaq said it botched the Facebook IPO, admitting that technology problems affected the trading of shares. Yahoo struck a deal to sell up to half of its stake in Alibaba back to the Chinese company for $7.1 billion. I'm Lindsay Bell, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. The big news over the weekend was the G8 meeting, which it wasn't too much new news out of there, but we heard that while some countries could change their policies, as it refers to monetary policies, they want Greece to stay in the Eurozone.
Well, what they want and what actually can happen are two different things, and they're trying to be communicating that they want Greece to stay in, they want a unified Eurozone, but the market's not so stupid, and everyone pretty much figures out that Greece has to go. The question is, what kind of damage do we have in Spain? What kind of damage do we have that could be peripheral to Italy or whatnot? So out of the Eurozone, maybe it was positive enough or kicking the can enough to have the futures up a little bit, because it wasn't like they walked away from the table slapping each other around and there was any kind of crazy headline. So it was kind of soft, kind of quiet. So, not much has changed over there.
And in other parts of the world, we heard out of China that they're willing to do whatever it's going to take to prevent an economic slowdown. So we're still questioning, are we going to have a soft landing over there in China?
I think everyone was pretty much saying we're going to have a soft landing. It has to happen that way. But the recent data has shown that it doesn't have to happen that way. And as much as they want to do pro-growth and maybe have some cuts, in China, there is a slowdown there, and that's going to affect our earnings here as well. So there's a lot of complicated headlines out there. So what investors and market participants are really trying to figure out was the corrective action of the last 2 to 3 weeks enough? Can you position, put your big toe in some of the best companies out there after a 9% move off the highs, or is there more damage to come?
Yeah, everything really seems to be rolling over, so you kind of want to believe there's some opportunity out there.
Well, at this stage of the game, when we were down 4 or 5% off the highs, it was really easy to say, why would that be enough? So now that we're down almost 9% off the highs and every sector is starting to roll over, there's definitely some money to be made. So if you look at the chart of the S&P, you will see, a lot of our targets have been met. This was that head and shoulders top pattern that we were talking about, the left shoulder, the head, the right shoulder. When we broke 1360, that was your spot to get the cash. Or even if you were that seasoned, we talked about 1390. So coming into 1295, about 9% or so off the highs, I was putting out a note to say cover your shorts into the weekend, but it was also hard to be long considering the fact that we closed on our lows, Facebook was botched, financials still under pressure. There were so many things going on that for me, I was risk averse. So the question is, now that we're up 9, 10 handles, how does the market react? Do we close up 20 handles, or do we go negative through the prior Friday's low? Because what traders really wanted today was a 10, 15 handle down open, which we didn't get. So we're going to try and figure out, the next course of action.
Yeah, and I think we're going to need to look at some of the high beta leadership stocks. We had been looking at tech for quite a while. We're not seeing leadership there. I mean, Apple did get to, they ended in the green on Friday when the whole tech sector was a mess because of Facebook. So what should we do with that sector?
Well, you look at the Qs real quickly. It's also at a spot that's getting interesting. You've had some chances to sell. You had your chance to sell when it broke this upper level. You had your chance to sell right here. So now coming into major support, it makes sense to at least cover and then also have a plan if we can get to this 200-day moving average. And that's the question right now is, can we get to the 200-day moving average on a lot of these indices? Now, you did see some strength in Apple finally. You saw it come in the last day or so. It's trying to hold this 100-day. I know I talked about shorting Apple here, started talking about shorting Apple below 555. I'm not trying to short Apple anymore. I'm trying to find a level that macro money could be put to work as well as some short-term trades. So right now, I would say trade long Apple versus 522 level. I think it's better, and then we'll figure out if it could bounce. And then also, some of these, Facebook alternatives got hit, so we need to see how that goes along here. You look at LinkedIn, it somewhat tried to break this ascending channel. So your next level here on LinkedIn is to see if it could hold this 95. You saw Google sell off. You saw just a lot of damage in tech in that whole area. So it's not providing leadership. The question is, is it low enough?
We've also seen a lot of damage in the financial space. We'll continue to see headlines out of JP Morgan. I think they're testifying this week. But the financials also, they've pulled back quite a bit. So is there opportunity?
At this point, again, you got to cover your shorts, but buying has not been that productive yet. And if you look here at the XLF, you will see we're coming into my next spot. I talked about if we would break this 1440, you have the 200-day. Now that we're at the 200-day coming in, I think that this is a spot to cover shorts and try and test some long. Same thing with JP Morgan. You know, a lot of guys have been trying to find a dip in this to buy, considering look at this move from 46 all the way down to here, 33.49, and it closed a little off the low. So I do know some guys took some long, but at this particular point, you know, use this 32.97 as your pivot, and let's see if we can get some type of bounce, some type of oversold bounce to come into these moving averages. And maybe with JP Morgan testifying, he'll give some clarity.
Well, you know what? We'll get into that more. We'll get into the financials a lot more, the high beta stocks in the long version, so stay tuned for that.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.